Good evening, everyone, and welcome to Analah's Private Markets Webcast. This is where we bring stories of vision, hustle, and reinvention from India's most exciting startups, as you can see here. If you had joined us the last time, you would know how electric the energy was. Today, we're turning up the volume even higher. Let's start off with a quick disclaimer. Uh, this presentation is intended solely for educational and informational purposes. All analysis, recommendations, and information provided herein are for general knowledge and should not be construed as an advertisement, solicitation, or offer to buy or sell any financial instruments or to engage in any trading strategies. The content does not constitute a personal recommendation, nor does it guarantee that any investment strategy or recommendation is suitable for individual circumstances. Investments in unlisted shares are inherently risky and may not yield anticipated returns. Projections are based on historical performance and current market conditions, which are not reliable indicators of future outcomes. Viewers are advised to conduct their own due diligence or consult with an independent advisor before making any investment decisions. Analah and its affiliates, directors, employees, or representatives bear no responsibility for any losses arising from the use of this information. We are neither financial advisors nor tax consultants. Please consult your professional advisors before considering any unlisted investment opportunities. These opportunities are available only to accredited and high net worth investors and come with no assurance of an IPO or liquidity. Investments in private markets are for long term and carry risk of total capital loss. Okay, let's start to kick things off. Let's start off with an introduction. We have with us India's youngest billionaire, a Thiel Fellow, and one of Time's 100 most influential people under 30. He redefined budget hospitality by building Prism Life, which was formerly known as OYO, into one of the world's largest hotel and vacation home platforms. We're talking about 35 plus countries, 23,000 plus hotels, 224,000 plus homes, 132 million plus app downloads. Beyond that, everyone would know that he is also an angel investor in over 100 plus startups, several of which have made way to Shark Tank India, as you can see here. Guys, आज जो guest है हमारे साथ, he requires no real introduction, but here we go. This is with us. We have Ritesh Agarwal, founder and CEO of Prism Life. Ritesh, it's a pleasure having you here with us. Joining us from Analah's leadership is Mr. Hitesh Dhankani, who leads strategy and performance across all of the verticals of Analah Group. Hitesh has driven growth across all verticals and brings over years of leadership experience for some of the largest domestic and international asset management companies. At Analah, he's at the core of everything we do, the one who drives the engine forward. That's Hitesh for you guys.
Hi, good evening, everyone. Thank you so much, Tilak. So, Tilak always says Hitesh is the man behind this growth of Analah. It's not true because I think each one of you, Vishali especially, and all my team leads, senior people in the organization who are there with us from day one. So, thank you to all of you. This for the first time we are having 6 companies actually today, where we're going to talk about what's happening. So, 3 related to Prism Life and 3 startups. So along with, ladies and gentlemen, once again, a very, very good evening to all of you. Along with Ritesh Bhai, we are joined with 3 inspiring founders. So let me quickly introduce you to all of them. Uh, these are the founders who are backed up by Shark Tank, India's new age consumer story. We have Abhishek Daga, Lokesh Daga, Shruti Daga, co-founders of Nasher Miles. Abhishek and Lokesh are brothers, and Shruti and Lokesh makes a wonderful couple together who are trying to take India's 18,000 crores luggage market with stylish, durable, and affordable travel suitcase. So welcome all 3 of you. कहते हैं ना कि सफर हो या स्टार्टअप अपना बैग स्ट्रांग होना चाहिए. क्या बोलते हो? नाशर माइज रेडी फॉर द पिच? Great. We also have Rishabh Nigam and Nandini Srivastava, who are co-founders of Toffee Coffee Roasters. It's India's first true specialty coffee brand with capsules, ready-to-drink cans, and cafes, changing how India consumes coffee. तो कहते हैं इंडिया का नई कहानी अब सिर्फ चाय पे नहीं कॉफी पे भी होनी चाहिए. सो विल सी what Rishabh and Nandini brings on the table. We also have Anurag and Radhika, again a brother and sister duo. So we are two couples here, Nasher Miles, and we have Zebralearn, which is Anurag and Radhika, brother and sister. It's a visual first education platform with 40 plus books. And the best part is 13 books are Amazon bestsellers, making reading simple, fun, and engaging. So welcome all of you. So we are going to talk about six companies today. We have Prism Life, we have Innovate, we have OYO Assets, we have Nasher Miles, we have Zebra Learning, and we have Coffee Toffee. But before this, ladies and gentlemen, I'd like to give a quick background about what Analah is all about and what we do. We are a team of professionals based in three countries. We cover North America, we cover Middle East, and we cover India. We run different businesses, but our main focus is private markets. So we are one of the largest leading platform in the country today, which focus on late stage pre-IPO opportunities. We also run a platform in Middle East, which is regulated by DFSA, which is into fractionalizing private equity and real estate. We run a real estate broking arm, focusing on international markets. We also run a platform called Risify, which is an aggregation platform for PMS, AIF, and mutual funds. We also run India's leading insurtech platform now, which is into life, health, and general insurance. We are a platform which provides all three solutions from B2T, B2C, and B2B. Uh, we have 8,000 partners who work across all the products for us. So by far, we can say we are India's largest B2B platform from financial services. We are a decade-old organization, and support from all of you and the markets. We are doing extremely well as an organization. Many people ask us in all my platform, Hitesh, when are you coming with an IP of Analah? Right? And I'm going to ask you the same question from all of you, but just wait, give us more time, because I see many people messaging me when I was starting this. So very soon we'll come with an IPO also. We are working on it now. So three markets we cover, as I say, India, Middle East, and North America. In India, we are present in most of the cities. I am in BKC in Mumbai, which is our headquarters, followed by our presence in Gurgaon, Ahmedabad, Pune, and a lot of other key markets. We have done 128 companies. We are a completely sector agnostic platform. So, I won't take too much of time, but if you see many of the companies which were in the private market space, which we have done earlier, have listed. Our success stories is fantastic. Out of 128 companies which we have done, two companies have not done well, or 126 companies have done well. Most of these companies are listed. You can see on the screen most of these companies. Just go next, please. These are few of the companies which are on our platform. So we are doing all the exchanges today, from NSE to MSE to NCDX. We have done India's largest mutual fund. We did UTI mutual fund earlier, which got listed. So you can see on the screen many companies, which are there on the platform, and you can reach to our relationship managers if you're looking at investing in any one of them. But most of these have given fantastic returns. Just to give an understanding, NSE in last 5 years have given 5 times returns. Chennai Super Kings has given 16 times returns in last 6 years. So there are many stories to talk about, but this is not the right time for all these individual stories. Just a quick understanding. This is where we are present. So that's from my side. So today the endeavor is to launch A.G.A.I.N. What is A.G.A.I.N? A.G.A.I.N is Analah's global angel investor network. This is a platform to bring India's most promising early startups to a global pool of investors. Think of it as a bridge where capital meets creativity, where angel investors can back India's next breakout story at early stages. This idea I picture from you, Ritesh Bhai, because we were already into unlisted and pre-IPO shares. But we thought, considering our investor base where we managed close to $4 billion US, it was extremely important that, most of these guys were asking us to invest into startups, and we thought to create A.G.A.I.N. And A.G.A.I.N is a platform not only showcasing you Indian startups, but A.G.A.I.N is also a platform which will showcase you startups from North America. A.G.A.I.N is also a platform which showcase you startups from Middle East, from Israel, and many other markets. So कहते हैं कि इन्वेस्टर का विश्वास और फाउंडर्स का सपना, और वो भी एक ही प्लेटफॉर्म पे, वी कॉल इट A.G.A.I.N. So that's, guys, we are introducing A.G.A.I.N to you with 6 companies today. As Tilak mentioned, it's going to be a very powerful session of stories, insights, and opportunity. So over to you, Ritesh Bhai. We can start with the Prism Live presentation.
Thank you so much, Hitesh bhai. A lot of you have known us historically and have been great partners in our past progress. So thank you so much for that. But today is very special for me because when Hitesh bhai reached out to me and said we could do a session where we can invite some of the companies that had appeared at Shark Tank and we had the great honor to invest in them. I felt that was probably one of the nicest things that I could come along with all of our friends who I see will create the Prism and OYO of tomorrow, which would be enterprises that will create hopefully tens of thousands of crores of revenue and many thousand crores of EBITDA in times to come. So it's I'm of course delighted to see all of those happy faces. I'm of course Hitesh Bhai has introduced them, but I will tell you this: I don't think I was anywhere as bright as the founders here from Nasher Miles, Toffee Coffee Company, or Zebralearn when I was starting. So you would do well for yourself to spend time with them, and you will find some really high quality entrepreneurial energy in them. I wanted to take the opportunity, as you all know, every quarter I get the opportunity to come out and meet you, share the learnings of the previous quarter and the progress that I see ahead of ourselves. I've been, of course, very thankful. Tilak mentioned in the beginning that the previous session was a lot of fun. I think that after that session, I've received so many calls from people saying, I got land and let's try and build a Sunday hotel. Or I traveled overseas to UK and I've stayed at a location of yours there. So I'm very thankful for all the love you give us, and I hope you'll see that we return that back. Let me try and take today's opportunity to give you a very high level perspective on the last quarter results for Prism Life of Innovate and some of the interesting things that we've started doing on the other side as well. Okay, so I think today we are sharing the early results from quarter 126. So just to contextualize, we now have fully consolidated G6 Hospitality into our bookings. So we concluded first quarter with 7,200 crores of bookings. As you know, a part of the booking becomes revenue. So we received around 2,000 crores in revenue in quarter one. We've continued to, of course, improve on our operating efficiency, especially with the advent of newer technologies in the world of AI. We are seeing that the cost structures continue to get smaller. One of the specific things I have seen with AI, something that we use at Prism, and I'd encourage all of you to consider, is that at the senior leadership, we are almost mandating every day use of AI for a certain number of hours. And we feel like something like that fundamentally reduces the number of times one of our light keepers, we call a Prism employee a light keeper, one of them would reach out to another light keeper for saying, well, do you know what decision I should be making on a finance or a legal or a technology item? It becomes so much easier if it is with the use of AI. At least they can be better educated about decisions that they are making. So we feel like the cost structures will continue to be efficient, but at the same time, we will continue to recruit more. So as a percentage, it will come down. By absolute dollars, we will continue to rise. We also concluded with an EBITDA of 550 crores, which was in comparison to 166 crores of EBITDA in quarter one of FY25. And of course, that has led to, I'm always reminded that the EPS and the net income is the most important. So to that extent, we concluded with 200 crores of net profit, which would translate to give or take 33 or 34 paisa of additional earning per share. So we're sort of seeing positive impact all around. But my job is to tell you the good thing, but also tell you challenges, because when you look at this slide, it looks like there's a lot of good things happening. But there are challenges. There are challenges like how do we ensure that this growth that we have now caught up we can continue this momentum in FY 27, 28, and 29. So I and our management are, of course, focused on quarter two to quarter four of FY 26. But we are spending most of our time thinking, how do we preempt the efforts in FY 27 to make sure we have the right pipeline and the right infrastructure to manage a scale like this with good quality of service? So this is just a slightly busier chart of the same numbers. So we opened around 4,000 hotels in the last 1 year, opened in the same period around 40,000 summer houses, grew our subscriptions count significantly. Per property per month, the bookings you would see have almost 1.5x. There is a reason for it. There are two reasons. I would say the first one is we've seen premiumization at the heart of our strategy. In India, for instance, we've only opened townhouse hotels, pallet hotels, Sunday hotels, and Belvilla instead of opening a lot of our traditional OYOs, because we are seeing Indian consumers are premiumizing. In fact, right before this call, I was speaking to Lokesh, and he mentioned to me that their stores are doing extremely well in suburbs, which you'd have otherwise thought that lifestyle brands or modern D2C brands will probably take longer to come to these markets. Or, for instance, Toffee Coffee, Nandini and team mentioned to me that they're seeing ability to bring craft coffee to locations where probably people would not expect that these products are of value, or similarly with Zebralearn, where you're seeing uh, people's anticipation of content and upskilling being unique. If I were to look at our bookings, our hotels bookings have jumped up significantly. Homes and subscriptions have been, I would say, in that 15-20% range. And we are actively investing in saying, how do we create new supply in the future in order to accelerate this growth as well? I anticipate when you will look at the quarter two, you will start seeing that some improvements on growth further on those segments as well. Long story short, I think the cost structures have also been of benefit. You may notice that the 7% employee and G&A expense has now become 5%, and marketing expense of 5% has become 4%. So while absolute dollars have risen dramatically, on a percentage basis, we've improved, getting to an EBITDA range of almost 9% of the booking value that we have, but we have a long way to go. Let's keep moving ahead. I often look at the big 7 companies in the US, and those 7 companies are driving today 15% of the entire S&P, and they're still growing 20 to 25%. So when my colleagues ask me that, Ritesh, why do you expect to grow this quickly? I say, well, the world's 7 largest companies can continue growing this quickly. So we are much smaller than them. We are like an early stage startup in comparison to the scale that some of those enterprises have. So this is just a segment-wise context. The hotel business continues to accelerate in India and elsewhere, similarly on revenues. Let's keep moving ahead now. Thank you. Yeah, we'll keep moving ahead. So this just tells you the trajectory. So last year, for the first quarter, we delivered our first, I think, 150 crore plus EBITDA. We changed that benchmark, and in quarter two became 250 crores. We changed that benchmark and became 400 crores plus in quarter four. Now we are at 550 plus. Whenever we've reached a benchmark, we never reverse it, which means that that becomes the new base, and then we sort of build on top of that. What it does is gives us lots of new cash flow to grow our efforts and be able to make sure we can make positive amount of difference. Let's keep moving ahead. I would call out India's strategy. There's also a question on the Q&A section from Sunita ji, which is linked to our efforts in India. So what we saw is historically in India, as we grew our platform of OYO, the quality of experience at our average OYO did suffer or did have some variability. In order to change it, over the last 2 years, our strategy has been to only open locations which are self-managed by Prism or one of our brands. So to that extent, We've now opened over 1,100 locations in India that we manage ourselves. And these are branded as primarily three brands: townhouse hotels, pallet hotels, and Sunday hotels. We are opening almost 80 to 90 per month, meaning that every single day we are opening three new self managed locations. This is a lot of work, as you can imagine, because you got to go out and scout for the right location, renovate it to get to your standards, recruit the team which comes and manages them. But despite doing all of that, we're able to open these locations and deliver roughly the same contribution margin as our franchised assets. And I feel the reason we can do it is largely because of scale, not other way around, which is once you have scale, you can operate at, you know, 1,100 locations and deliver the same margin while keeping to open new locations. Let's keep moving ahead. And this is a same store growth. And this is special because no other country rewards you like India on same store growth if you do a good job. So, our same store, which means locations that opened in April, May, and June a year ago, to April, May, June a year later has been 40% plus, which is a pretty significant same store sort of expansion. It's partly because hotels take longer to season and get the upside. So it's an industry specific context. But on top of that, it's also because customers pay a higher price per night in a high repeat kind of a business. Because in our business, once a customer comes and they like the experience, they'll keep coming back in the future. Let's keep moving ahead. Of course, I think the booking contribution is now more than half from our company service portfolio. And in India specifically, we will continue to accelerate the openings from our company service portfolio. Let's keep moving ahead. These are some of the locations we thought we'd show you, but I'm sure you'd see some of them as you get past. Some of you may have noticed about our brand changes. So the brand OYO today represents only a quarter of our global bookings. So it made sense to make sure that the brands that are more representative of our broader company got the spotlight. And to that extent, we launched Prism Life as our new corporate name. And within that, have made two segments. One is OYO and Motel 6, which are our economy brands. And then we have our premium brands, and we've distributed them into two segments. And just yesterday, we announced the premium brands to be housed under what we call is the check-in hotels collection. So in the check-in app, we only sort of make available our premium hotels. You wouldn't find sort of our traditional OYOs and Motel 6 in the check-in app. Let's keep moving ahead. And the logic or the reasoning behind this is you've seen this with our distribution partners at Make My Trip or various other companies that GoIBibo attracts a certain set of customers, and on the other hand, you would see something like a Make My Trip system attract a different set of customers, and that's quite valuable to us. We are seeing some incredible growth in the UK recently, and you'll see some of these locations being, fantastic. So if you see on the top left, there's this location called the Sunday Stains. This one hotel does 21 crore in revenue. On the top right, you see the Holland House, Cardiff by Sunday. It's a listed building, which means it's protected by the cities. This one hotel will do 113 crores of revenue. So these are, great locations, and these allow us to power the growth at this scale of being able to book, over close to $1 billion every quarter now. Let's keep moving ahead. Yeah, the same in India. We can just keep moving ahead. And these are increasingly a lot of growth we are seeing in the Middle East. One of the hotels that I often like to call out is a location called the Sunday Emirates Grand. This is in Dubai on the main Sheikh Zayed Road. This is a 500 key hotel, and it's been sold out last couple of months, which is pretty incredible. And that's because of the power of Indian tourist. Because in Dubai, due to the summer season, very rarely, I think I had imagined that our occupancies will be low during the summer season. But then, given there's a lot of Indian travel overseas, there's been few long weekends recently. We're seeing a huge amount of Indian travel to a lot of these places, and due to which we are changing, right? Like all our restaurants and food used to be pizzas and continental cuisine, we are increasingly bringing Indian cuisine and Indian-oriented products to our locations as an outcome. Let's keep moving ahead. I think there's, of course, a lot of growth in the US. I'm currently in the US at one of our locations, and we see this as being, a great opportunity. American customers know how to spend, and we hope that we can try and, listen in and create a lot of upside. Sunita ji, I think I appreciate your comment. We will be in touch with you and make sure that we learn which location you stayed at and what was your experience like and how we can improve. Thank you for sharing it with us. I'll try and also share some of the work we're doing in Europe. I think similarly, the summer house opportunity remains big there. And we are now bringing it here in India. In India, we've brought our Dance Center brand, which is our summer house brand, and have expanded it quite significantly. We've been growing in Goa primarily, which as an early experiment for summer houses, and we will see that in the future. I received a few questions today on the IPO. So on the IPO, look, the Indian
Ritesh bhai,
markets
there'll
are.
be so many questions. So I think because we have limited time, so let's have the full pitch because you keep answering these questions. Let's focus on the presentation. I have
I
four, five
shall. I
questions. I
shall.
think I will cover all of them from most of these guys because many of these, a lot of people have sent me direct questions. So I will ask these 4, 5 questions from you. Uh,
You know this, Hitesh, bhai, that I'm always a big fan of making sure that every individual person feels heard. But that said, I will make sure that while I listen in, I ensure I focus on the time. I think this is a question that we received on the IPO earlier. I want to share that the Indian markets are in a
I think
great
that's the most
situation.
important question we have.
Yeah, the
Yeah,
Indian
when is the
markets are in a
IPO coming?
great
When are you
situation.
filing for DRHP?
And we see that there's just I'm a happy angel also in urban company which recently listed, and it's done very well for ourselves. There is Pine Labs which we are angels in, that's coming public very soon. So I feel quite optimistic that the kind of love, if you are a well run good performance enterprise in India, you're getting a lot of love. And I think that is where we will be different from 2021 effort of ours. Sure, in 2021, there was also the Russia-Ukraine crisis that came by. But on the other hand, at that point of time, we were losing 500 crores a year. Now we make more than that in a quarter, not a full year. So to that extent, it sort of really positions our company very well. But the board's currently reviewing this, and at the right time, we will bring it to our shareholders for a vote in our shareholder assembly. I hope all of you received the invite. We have on the 26th our AGM in which we are going to put to vote a lot of fantastic decisions, both for the interest of shareholders as well as for the long term of the company. And we hope we will see you there and you'll consider voting in. With this, on Prism Live, I would like to take you to the second part of today's discussion, which is innovate.
I have few
Innovate.
questions, Ritesh bhai. Very quickly,
Yeah,
few questions,
let's do
right?
that.
Okay, so very fast for everyone's benefit of time. So we saw that Q1 FY25 your PAT was 87 crores. Q1 FY26 the PAT turned to 200 crores. What were the key drivers behind this performance? This is more than 100% growth on PAT.
Yeah, so I would say it was a combination of three things. In our business or any consumer business, frankly, what you invest today gives you a return 1 year later. It is almost unfair to look at 1 month or 2 months and say that the result will come in the third month. So, to that extent, last year we opened a lot of locations or a lot of properties in the premium segment of townhouse, Sunday hotels, and so on. They all took, I would say, 6 to 8 months to fully season and make sure that they can get the productivity. But now that the initial customers have stayed and there's enough number of repeat pattern, we are able to get the second repeat, due to which we are able to get higher occupancy as well as higher ADR, which we are quite optimistic about. So that's the first thing. The second is also relative reduction in our interest cost. We refinanced our previous debt. which came at a cost for us last year, as you and I have spoken about earlier.
Correct.
But that is starting to provide benefit on our net income now. And the last but not the least is continued margin growth. We are seeing that our margins are able to hold and improve in a lot of segments because of fixed cost structure. So those are the three reasons.
Okay. And what was the PAT for FY25? And what is the PAT you're looking for FY26?
So FY25, we delivered an operating profit of 450 crores. We delivered a net profit of around 250, largely because of the one-time financing costs that came when we refinanced our past debt. As you know, we already have done 200 in the first quarter. So we are anticipating that we will do at least 4 multiply the first quarter, but we'll see what better we can do. So it's look, I think for me, I'll tell you this: our board told me 3 or 4 years ago that all you need to do is deliver positive EBITDA.
Correct.
Then they said you have to deliver positive cash flow. Then they said you have to deliver good net income. Now they remind me they want ROE of 50% plus. So I keep learning and I say that this is a treadmill and we try and keep improving, isn't it?
Correct. Will you file for DRHP in 2025 or 2026?
It's
But
hard
I'm
for me
getting
to.
back-to-back messages on phone. This is the most important question for us.
No, it
So,
is the most important question, and I will tell you this: I wouldn't do at this point of time any public meetings, but this one is not public. This is among friends and co-owners of ours. So I thought I will come by and speak to you. But I'll tell you honestly that there is a lot of positive attention we are paying towards a potential public offering. There's a lot of interest from the markets to consider being a part. Um, I was personally enjoying building our business. There's just being a private company is great as an entrepreneur because you can just focus on your business and your results. But I do recognize that we have reached a scale where it does make sense to be a public company. So short answer is I think subject to shareholder consent will come to all of you. We do believe that there is an opportunity of an IPO in the near future. So we'll come to all of you for an update at the right time, but we are working towards giving attention to our public offering is what I will tell.
perfect. Recently in OYO's AGM notice, it mentions a 1:1 bonus. So congratulations to all of us, I will say. And it talks about September 30th as a record date. What is the idea behind giving this bonus issue? Especially, is it because you have IPO in mind? Because a lot of people say bonus aa raha hai to IPO aane wala hai. But what is there in your mind?
Yeah, so there are two reasons for it. The first is, as you know, we've now had 8 quarters of declared profits.
Right.
It had helped expand our reserves. As our reserves expanded, we recognized the great support of our shareholders and co-owners. So to that extent, we wanted to reward our shareholders, including myself, who's a shareholder in the company. And bonus is a good way to do it in terms of continuing to reinvest the company's capital for future growth while giving an upside from the reserves of the company to our shareholders. And the second is, of course, as and when we come out with a public offering, it allows us to be at a place which can broad base the set of future shareholders in our company in the public market. So those are the two reasons, Hitesh bhai, for considering a bonus.
Last question on Prism Life. Uh, so one very important question. You said that our first quarter. I won't say yours. I say mine because I'm also a shareholder of it. So our first quarter result is 200 crores of PAT, and you talked about that we can multiply. We try multiplying it by 4 times, so we can look at a PAT of 800 crores. Great in FY26. What is the view in FY20 to 2030 in next 5 years where you see OYO on PAT, not on revenues?
Yeah, look, my view is that, and this I've told you, Hitesh bhai, I think I have over the years become very conservative in my estimations. What that has let me do is just have a very peaceful experience of saying that we will always end up achieving and delivering good outcomes for all of our capital providers, whether it is institutional capital providers or it is family offices that have partnered us. But the way I see it is, can Prism Life, today India Hotels is India's premier hotel corporation listed in India. Can Prism Life be the second or the equal representative of Indian hospitality as India Hotel Company has become? And do it with the use of technology to make sure that we can expand quicker, deliver better experience, and do it with better margins. So to that extent, I feel we should certainly be able to at least add a rupee of EPS every year, pre-split basis or pre-bonus basis,
Correct.
in terms of outcome. So I think that in the next 5 years, it is quite imaginable that we'll be at the 6-7 rupees range of earning per share. But that's in my mind. I hope that every year I get to come back to see you and our friends here and say, I think we could have imagined much bigger because we've done much better this year. That is what I and our teams will work for.
So even at a 5 rupees EPS, 5 years down the line, a 30 multiple gives a price of 150 per share, and a 50 multiple gives much more than that. So let's see. Wish you all luck, Ritesh bhai. We should move to innovate quickly. Quick 5 minutes in innovate.
Yeah. So innovate, I think I'll just verbalize and just show you, actually take you to probably just 2 slides. The first slide is page number, I would say 6. So when we last met, Innovate had a total of 20 locations. I'm happy to report that Innovate now has 50 locations. We have another 15 under pipeline. But out of 15, what you'll find amazing is 50% of our revenue almost comes from Mumbai. So Innovate is a Mumbai brand. We've opened Q Park in the New Mumbai area. We have, of course, expanded our locations in, the Goregaon area, where we recently brought in the A.G.A.I.N corporate park. Some of you may remember it as the Viacom headquarters historically. And quite a few, our city, which is going to be opening very soon. In BKC, we've been expanding quite significantly. So our view is very simple. We understand the Mumbai market very well. The Indian multinational corporation expansion is the real focus there, where we're seeing companies like Tata, Mahindra, and a lot of those companies, when they're bringing the digital side, they're looking at Innovate and Innovate sort of enterprise as a good choice for them, which is allowing us to grow very quickly. What this has led to in Q1 to page 11 is 56% revenue growth, 55%, 56% center growth and 55% revenue growth, with almost a 190% EBITDA growth. On a full year basis, last year we delivered 30 crores of EBITDA on an Ind-GAAP basis. We are expecting that this year we will be able to double it to 60 crores. So as you know, at the OYO setup of 550 crores in a quarter, 7 crores looks relatively small, but it is growing very rapidly, and I'm sure they will do very well. And it's led by Pankhuri and her very capable team, and they're very committed to making a positive difference at Innovate.
So Ritesh bhai, are you also looking at Innovate IPO in the future? Last, what I know is you raised 80 crores or close to 100 crores or 1100 crore valuation, right? And it's been a fantastic growth from 200 crores of acquisition to 1100 crores of fundraising. It's fantastic. What is your view on IPO for Innovate? That's one question. Second is, where do you see numbers happening over the period of next 5 years from now?
Yeah. So I will answer it in 3 parts. The first is, I think, let's go actually a step back. Why Innovate in the first place? So Innovate was started with a thesis of, at Prism Life, we are the best at finding a way to monetize every marginal square feet, whether it is in a hotel, whether it is in an apartment, whether it is in an office space. That's sort of the mindset we thought about. But in the last 2 years, we've become increasingly convinced that Prism Life should be accommodation focused. And outside of accommodation, we want to ensure that Innovate can have a life of its own. That is why we welcomed external partners to join directly. And we had great partners that came in and supported us. Now, within Innovate, our biggest strength is our design, that we're able to design these locations well, due to which our EBITDA margin, our Ind-GAAP EBITDA margin, is almost 10 to 12% better than the industry. That has allowed us this kind of an outcome. To your point, I think on the IPO, at some point of time, of course, Innovate will have a potential of having external public market opportunity, but it is not going to be immediate future. At this point of time, our immediate focus is focused on doubling the EBITDA this year so that we can create significant upside this year so that by later next year or the year after, we can try and take this enterprise public. That's sort of what we're seeing, and we're seeing lots of new city growth. For example, I was just seeing some of the notes about saying the great opportunities in Hyderabad. We've just opened 3 new centers in Hyderabad and all doing exceedingly well. So I'm quite optimistic that there's 4 to 5 listed companies in the co-working space now, whether it is SmartWorks, whether it is AWFIS, whether it is there's a few others, and WeWork should be going public anytime now. So I anticipate that all of this will create great opportunity or benchmark for us. So when we go to the market, we can just say that, well, our EBITDA margin is this much better, and we grow quicker, and we hope that we will get the appreciation and love that the industry has gotten so far.
So we are talking about an IPO listing in next 3 years for Innovate. Am I right? That's the target.
Yeah. Yeah, I would say under the next 3 years.
And from a 1100 crores of valuation in the private market space, where you think the number is going to be in next 3 years?
Yeah, so the simple maths is I'm very earnings focused, Hitesh, as you know. So my perspective is that we should be, let's forget 3 years, let's say at least 2 years. I think in 2 years, we'd like to be at the 200-ish crore EBITDA range. Our market is priced at 20-25 turns on EBITDA. So 4,000. So in private markets, you'd possibly ensure that you create reasonable value for your private market capital partners, that you try and go up to that 4,500. Hopefully, we will get a premium on the multiple because of our higher growth and margin.
Correct.
But even if we don't, I think there is still a good, healthy upside we can make.
Perfect. I'm done with Innovate, Ritesh bhai. So let's talk about OYO Assets, Sunday Proptech. Why this new venture? What's happening here? I think this will be very, very much exciting for all of us.
Yeah, look, I think this is the first time I'm communicating about it. And you should know that I told this to Hitesh by many times that we want to keep this under wraps. But he mentioned that if you're speaking to your partners, you might as well just share everything that's behind. So look, so we launched this enterprise called Sunday PropTech. It's fairly simple. I don't think we need, yeah, I think keep moving ahead. Yeah, just stay here. So if you see in the hospitality industry, whether it is a brand like Marriott, or if you look at Starwood, or if you look at Intercontinental Hotels, all of these companies have built strategic partnerships with enterprises which are focused on building hotels or owning hotels. So, to that extent, we are able to see a lot of opportunity in terms of long term growth, wherein you're able to participate in value accretion of the property value, but at the same time, you're able to expand the brand itself. And this is not just the case with Marriott. If you go to the next page, this is being done by Intercontinental. These are all listed companies. Ventive is a listed company. Sami is a listed company. And similarly, if you move ahead, Taj GVK is a listed company. So we see this fundamental opportunity of saying that the property value expansion, along with controlling the land, has a long-term value creation opportunity, and multiple corporations have been well rewarded for it. But at Prism Life or at OYO, our focus has been being asset light. We don't own properties and don't intend to own also in the future a lot of properties. So our perspective became, how do we participate in that upside without having to, make Prism Life asset heavy? So due to which we've now made a joint venture with external financial institutions to go out and build an asset ownership play. This will be a joint venture company with ourselves at Prism Life, wherein we go out and buy new locations and create value around themselves. The first, now let's go back to page number 3. We've now sort of entered into a contract to buy 8 hotels, and on the other hand, also have leasehold of around 14. We're seeing very positive impact. These locations we believe will be extremely profitable at scale for our company Sunday PropTech Limited, but also for Prism Life, because Prism Life will put the brand there and hence get a brand fee. And you should know the brand fee will be the lower than what an average hotel gets, and that sort of benefits Prism Life because Prism Life gets great locations and helps Sunday PropTech because Sunday PropTech is able to get a good deal, frankly, as an outcome. So the business plan is very simple. OYO Assets will acquire high potential assets. We've bought 8 hotels so far. So far, it's been funded largely between Prism Life as well as our third party joint venture partners. We see that there will be great RevPAR upside because we know the knowledge and the data of which locations the returns are the best. We, of course, believe that this could be not just the largest, but also the most profitable hotel ownership corporation we build in India.
Amazing.
And that's because anything we do at Prism Life, we do it at scale. We don't do nothing for small scale, right? Like that's no good
Correct.
for our time and effort to do anything small.
So we spoke about, so if I differentiate, so I can say OYO, which is Prism Life, is a asset light model, and OYO asset is a asset heavy model where you're actually looking at ownership of the hotels. Is the right way to differentiate this?
That is absolutely right. Prism Life is more like a technology and hospitality company where technology is a distribution app and the backend technology we build, and the hospitality because we run hotels. And on the other hand, OYO Assets is our asset heavy division where we will own the land, the properties, and so on. But it will benefit OYO's shareholders or Prism Life shareholders as well because it's a joint venture and close to half of the company is owned by Prism Life shareholders. So it's fair for everybody involved in the process.
So what you mentioned about you have looked at acquisition of 8 hotels in United States of America. So first is why US and why nothing in India up till now in this business? And do you have plans to get
Yeah,
into
no,
India also?
Yeah, no, look, I think the 8 locations are currently, look, first off, we are very commercially focused. We want to bring locations which will create great return for ourselves and our partners. So to that extent, these 8 locations we saw provided great opportunity. We knew these locations very well. And we have, of course, our brand Studio 6, which allows us to sort of expand and drive a lot of positive difference. Similarly, I think in India we have 4 locations which are currently under advanced discussions, and hopefully they will come by very soon as well. Right.
Perfect. Again,
If I
last
take you
question.
to,
Sorry,
yeah,
go
please,
ahead. No, no, please go ahead.
please go to page 14. And Hitesh, bhai, first I'd like to hear your question, and then I'll share what I have to share.
So my question is, we spoke about, looking at OYO filing, Prism Life filing the RHP in near future. We spoke about, you said Innovate can get listed in next 3 years. What is your plan for OYO assets, say 5 years down the line?
Yeah, I think that is sort of the journey, right? Because this is the earliest effort in our enterprise. So we would see this at least like again, 3 to 4 year kind of a journey ahead of ourselves. And look, India needs this today in the 4 star and 5 star segment. There is no supply available, due to which in the price points for locations, hotels nowadays, you can't get a room for below 15,000 rupees or 20,000 rupees a night. So our
Correct.
perspective is the more supply we create, the better it is for India, the better it is for OYO Assets, and the better it is for Prism Life. So it's good for all of us. And this is sort of what we're seeing in the early days. I think we're looking at our first 8 locations to take us to around 25 crores of EBITDA this year and 93 in the upcoming year. Again, a small enterprise in comparison to the overall Prism Life, but growing very quickly. Prism Life is growing maybe 100%. This is growing probably 3 times. So that's a significant amount of growth.
Yeah,
So all
because
I
it's
would
like BSC and NSC, where BSC has given 50 time returns in 5 years. I always say that I put my money in NSC because I was busy. BSC has given 50 time returns because it's a smaller, it was much smaller, 7% of the market as compared to NSC. And so I'm assuming similar growth, which I can see in Prism Life because Prism Life is really very big today and OYO asset. So I'm assuming that same growth, we will see in OYO asset also. So
Yeah,
one
no,
more.
look, I see it like an early stage startup within Prism Life, which is doing something new and trying to make a positive difference.
So according to you, what should be the market cap of OYO Assets today, which where you spoke about acquiring 8 hotels in US and India, and what do you think in 5 years down the line? That's what, as an investor, if I, if someone wants to look into this opportunity.
Yeah. So, Hitesh, bhai, first off, I'm not a specialist in the capital markets. You're a specialist, but I will tell you what I understand. So, typically, companies like these, if you look at Indian markets, they are priced at anywhere between 18 to 23 times kind of EV EBITDA, forward EBITDA, right? So, to that extent, we anticipate that just forget long term, just think about next year. Next year, we will do 95 to 100 crores of EBITDA. On that, we would be 2022 times. So, you're talking about roughly give or take a 2000 crore or so price point. My perspective is that today we are not there. Today we are behind, and there is some potential performance could be probably slightly higher, probably slightly behind. So there will be a discount to the 2000 crore. I don't know what the discount is. Like it could be 15%, it could be 20%, it could be 50%. So the 50% discount will make it 1,000 crores. And that is, by the way, the property value of these assets roughly. Or it could be 1,500 crores. So in between 1,000 to 2,000 crores is how I would see it, Hitesh bhai. But like I said, I'm not a specialist in this.
So, we say OYO Asset is an asset heavy model, right? And when you started this new venture, I would say this is a startup. Uh, Today you're talking about 8 hotels. You're talking about acquiring more hotels in India over the period of next few months. Do you have some number in mind that next 5 years, Hitesh, I will have 100 hotels or 50 hotels or 1,000 hotels? I'm not holding you for this. It's just I'm sure you're a visionary and you would have thought of, if I'm creating OYO Asset, these number of hotels should be there. These at least 100 hotels or 50. Something is there in your mind.
Yeah, no, I think that is exactly our perspective. I think before we go public, our aspiration will be to be at between 75 to 100 hotels because at that scale, you are a meaningful player and you can again go back to the market saying that this enterprise is the largest number of hotel owner publicly available company. So to that extent, we think that that's the scale I'd like to get to. And see, the good thing is I have access to some resources. So I can just fund this growth all by our own balance sheet. And we can, of course, we have great joint venture partners and they can support us. So we are well resourced to be able to expand and create this impact.
Perfect.
Okay.
Thank you, Ritesh bhai. I think we are done with all the 3 companies and congratulations. I can only once say someone who wakes up at 4:30 to come on a webinar and give a business update of what's happening in prison life. You're super workaholic, Ritesh bhai. Kudos to you. God bless you. And I think be healthy. I think that's most important to you. So with this, we move to Abhishek, Lokesh, and Shruti or Nasher Miles. Ladies and gentlemen, over to you.
Thank you so
Before
much.
Lokesh to
Yeah.
come by, I want you to know that if you have not watched their Shark Tank episode, you should. Because each one of the sharks was fighting to get into their deal. And these companies, they demonstrate if you thought I work hard, you would see the impact that they are building in times to come. So I think, you're all in good hands with them. I'm going to be around. I want to listen to them as much as all of you do. So I will be around. But over to you, Abhishek, Lokesh, and Shruti.
Thank you so much. Am I audible, Hitesh bhai?
Yeah, you are there, Lokesh bhai. You are
I'm
there.
audible.
Yeah.
Can you guys see my screen?
Yeah, we can see your screen. Yeah.
One second. Hi. Thank you so much for giving us this opportunity. It's a pleasure. I'll quickly run through the market, what we are targeting to.
So
So
just for
it's a huge.
everyone, I think when I saw the picture, all of these sharks are invested in your company, right?
Yes, all
So I
five
can
of
see Aman,
us.
I can see Ritesh bhai, yeah, almost everyone. Wow, great.
I mean, these are our early backers. When nobody believed in us, the sharks believed in us. And I think life for us has changed and how. And we are forever grateful and thankful to them.
So all the listeners who are watching us, right, you can also be a shark through A.G.A.I.N, which is Analah Global Angel Investor Network, and can invest in Nasher Miles post this presentation. Over to you, Lokesh.
Yeah. So just quickly, what is the industry we are targeting? travel and luggage market is growing at a very handsome pace. Travel is expected to grow at 11% in the next 5 years, and India will become the fourth largest global travel spender. And it is fueled by young adults, which is the result of increased air travel, train infrastructure, and people are traveling and how. And at the end of the day, people travel more luggage. There is a need for luggage, backpacks as they travel, and that's where Nasher Miles becomes relevant. Before even saying more about Nasher Miles, we thought I'll just play a quick video to give you all a feeler what Nasher Miles is about.
No, we can't hear this. So you're not audible.
Is it not audible?
No, it's not.
1 second. Sorry. I'm not able to do that.
When you do screen sharing, there is a button where you need to enable the audio. Am I right, Vishal? Yeah.
Yes, I don't know. It's not happening right now.
Can we do
tried
this?
it out. No,
It's okay, just play.
It's okay. No problem. I'll just. Okay, it's not happening right.
Just play.
No, it's not happening. Okay, I'll just quickly play without the audio.
No, you can actually switch on your phone. Something like that you can do from other laptops. Switch on the music and then.
No, it's fine. At least people will get a feeler what Nasher Miles is all about. So whatever we do at Nasher Miles is all about colors, and that's what these videos are showcasing. We are catering to a young India, young audience who love to travel. When you travel, we want you all to look beautiful. We want you all to look stylish, and our bags at Nasher Miles helps you do all these things. I mean, why to travel boring? I mean, when we have good clothes, good shoes, good sunglasses, your travel accessory also needs to be beautiful, and that's what we enable people. You can go. Yeah. Okay. So So Nasher Miles is focused on four pillars: product, branding, distribution, localization. And at the heart of everything, what we offer at Nasher Miles is color, style, and relevance. We want you all to look beautiful, and everything we do at Nasher Miles is the central theme is about colors. Just to give you a brief update, what we are and who we are, around most of our sales is coming through luggage as a category, and we have the widest assortment of products available in the luggage industry. There is no other brand who has a higher or a bigger assortment uh, in luggage, unlike rather than Nasher Miles. And a small percentage of our sales comes through backpacks, followed by accessories. Uh, and what do we do is, first, as far as the branding is concerned, we partnered with Rishabh Pant as a brand ambassador. Along with that, we have exclusive tie-ups with most of our partners. So let's say Flipkart, Myntra, Zepto, and a lot of other folks where we continuously try to harp on the impact of what Nasher Miles is bringing onto people who are traveling. So it's everything is all about colors, and that's what we day in day out we enforce upon. Uh, I think as far as branding is concerned, this event has been the watershed moment of our lives. I think nothing was bigger than this moment, and I think it completely changed on how people started looking at us. There was a time when we became the number one search rank when an episode got aired on February 2024 10th, and I clearly remember the date. Our website sales shot up, our ranking became number one in Amazon, Flipkart, etc., etc. And I think we made a fair amount of progress post that. From a mere revenue of 83 crores this year, we are at an annualized run rate of around 180 odd crores. So I think life for us has completely changed, and we'll always be grateful for the opportunity we've had. Uh, So just to give you a perspective, where are we selling our products? We are there in horizontal marketplaces, which is Flipkart, Amazon, Myntra, where in the suitcases and the luggage category, there is no other brand who's bigger than us. Okay, we are number two on Amazon, and we are also there in vertical marketplaces. But the biggest thing which is happening currently, and where our entire focus is being there, is on quick commerce, where again we are the number one luggage brand. We have a market share of close to 30+%, and we expect quick commerce to contribute to around 15% of our overall sales in FY26. And we are there in Zepto, Blinkit, Swiggy, Minutes. There is a new vertical quick commerce which has come in the name of Slick. And not only in this, we are also rapidly scaling ourselves in offline. We started our offline journey in June 2024, and in the period of around 15 months, we have around 6 grand outlets spread across Mumbai, Ahmedabad, and Hyderabad. We are present in modern trade channel like Spar, Walmart, Spencer's of the world. We are there across 1,300 plus touch points across the country through our network of distributors and dealers. And offline channel contributes to close to 22% of our overall sales. I invite all of you all, if you are in Bombay, Ahmedabad, or Hyderabad, please do visit our stores and show us some love. And the biggest thing what we have done in the last 1 year has been shifting our production completely to India from a 20% production in India in FY23. By end of this year, we are looking at 80% production in India for us. And the expectation is by in the next 2 years, we will be probably 100% manufacturing everything in India. What does it mean for Nasher Miles? This definitely means an increase in gross margins, better inventory management, improve quality, reduction in working capital for sure. So, and of course, there is a great joy in making the products in the India where you are empowering a lot of people in itself, in the country. And what's the way forward for us at Nasher Miles? A quick slide. Um, our aim has been to grow profitability. We've always been a profitable company, and the next 4 5 years we don't see it anything else. We want to scale profitability to INR 600 plus crore with 12% EBITDA by FY30. Our EBITDA margins has been in the single digits in the last 2 years because that was the first time we diluted our cap table, and we used this money for investing into the future, for expanding for increasing more brand awareness. However, in the next 5 years, we have a clear-cut plan ready where we expect the revenue to be around 600 crores with a 13 odd% of EBITDA and a 10% PAT. And I'll just take 1 minute to give a competitive landscape at which we are operating in. There are these new age challengers, Mokobara, Uppercase, Assembly, Yumi, and kid you not, all of them are doing a fantastic job. This is a small place where how we are trying to create more impact. The DNA in which we are working is we want to be more capital efficient. So, in spite of the fact that we have raised only 37.5 crores so far, we have been able to scale to around 120 crores turnover last year. That was a revenue, and we are expected to close our ARR currently is trending at around 180 odd crores. And all of them are doing a good job. Everybody is trying to have their own path, but we feel with our skill set, with our execution capabilities, our road ahead is definitely on. And then there are these incumbents, the three big players, where they are 1,800, 2,000, roughly odd crore turnover. That's where this is the market at which we are competing. And what is the ask and what are we looking for? So just to give you a background, all of them. So Mokobara had raised the last round at 700 crores. Uppercase had raised around 520 crores. Assembly had raised around 88 crores, and Yumi at 124 crores. For us, Nasher Miles, our last round valuation, which happened around 1.5 years back, was at 250 crores. when we were at around 85 crore turnover. Right now, with an ARR of 180 crore, we are looking to facilitate a bridge round of INR 40 crores at a very attractive valuation of 450 crores. And what does it mean for all of y'all? We get a super attractive valuation of 3x of sale, which is very attractive compared to what my competition is there. Uh, Plus, our company, our DNA is profit first. We want to grow this business profitability because in our industry, repeats are very low. So we need to ensure that each and every transaction which we are making profit. And of course, whatever we are doing or whatever we have been doing for the last few years is about getting IPO ready. And we don't rule out a possibility of, listing ourselves in the next 3 to 5 years. Why do we need this money? Basically for three things, which is made in India. We want to expand more and more into offline, and we want to increase our brand awareness. That's about it. Thank you so much.
Thank you, Lokesh, for I think you'll be very focused that you want to come with an IPO in next few years. You talked about a valuation also. You want to raise capital at 450 pre-money or post-money?
Pre-money.
Pre-money. Okay, perfect. And where do you see revenues going in next 5 years from now?
We expect the revenue to be around 600 odd crores.
600
Okay,
odd
on
crores.
that slide.
600 crores. I mentioned in the slide. So that is the time where at 600 crores, we'll be delivering a 10% PAT and a 13.4% EBIT.
Okay. See, like when I see OYO, which is Prism Live, I always see Ritesh by buying back his shares from the market, right? So I want to ask this question from you that most of the founders are diluted a lot, right? How about you guys? How much have you diluted up till now? Are you really
But I
serious
think
about, because I see some startups, we typically do late stage pre-IPO opportunities because in startups the mortality rate is very, very high. So we want to be extremely cautious. But I want to understand from you how much have you diluted up till now? And I think maybe I get the answer.
I think for us, that is one of our USPs. We have a very strong promoter holding, which indicates at 85% is what the promoters still have, which means our skin in the game is the highest at this point of time. And we are committed to deliver money to our shareholders. And at this point of time, the biggest shareholders is us. So I think that's what we are gunning for.
Within the family. So it's between
Yeah,
you,
which is the family.
Shruti and
So
Abhishek.
between the three of us, we have 85%.
तो आपका
And
कैसा
I
रहता है
will
जब घर जाते हो तो आप क्या बात करते हो, मतलब तब भी नाशर माइल डिनर टेबल पे सोते वक्त भी, what do you talk about? Because all of you in the family are only Nasher Miles. So what discussions do you
Hitesh
have on the
bhai,
dinner
I'd
table?
love to answer that. I think
Yes,
we've
Shruti.
given up any hopes of maintaining boundaries when it comes to personal and professional life. Work is everything currently, honestly, and there are no boundaries at home. We've given up on this long back.
Super, super. I have the
And I
same
will
thing
tell
with
you
the.
this, Hitesh bhai, having seen Lokesh and Shruti in action, I think I can validate both the things they said. The first one is they care about their equity down to like the last decimal. And
Correct.
that's because they care about this enterprise as a multi-generational outcome. I don't think they just see it as a 6 mahina, 1 saal. And you may see Lokesh doing it for last few years, but if you watch the Shark Tank episode, I've spent time with them listening about it. They've been doing this for last 10 years. They know what it takes to build a D2C enterprise before it really started. They just started monetizing this recently. So I just want to share that I've been thoroughly impressed, and sometimes, frankly, I sort of kick myself saying, I wish I was this good when I started. So I wish them only the best.
So how this idea came, Lokesh, Shruti, means what happened, how long you started, how long you been in this business. You're on mute.
So I think it actually came the eureka moment for us. All of us love to travel, and I mean, we were standing in a conveyor belt, and we genuinely felt all the bags look similar, which is black, blue, gray. And you'll always see an old lady or an old uncle trying to identify the luggage. And, most of us still have this habit of tying a red molia or some unique mark around the handle to identify the bag because सब bag एक ही लगते हैं. And this was the moment where we thought that why do everything need to be black, blue, gray? let's bring some color and life into this category. And that's how probably Nasher Miles was born.
Interesting. Can you talk about your revenues for last 3 years? 23,
Yeah.
24, 25?
FY23, our revenue was around 53 crores. FY24, our revenue was 84 crores.
So
And
50% sort
FY20,
of plus growth, 60% growth.
yes. And all of this was bootstrapped. So we were always taking money from our friends and family at interest, repaying them interest. जो पैसा हम लोग कमाते थे, we used to deploy back into the company. And at 84 crore was the first time when we raised capital around 37.5 crores through Shark Tank angels and friends and family. And that's when we doubled down on our Made in India production, increased team, got into offline, and we shifted our gears from being only an online first brand to becoming an omni-channel brand. And the dream is to become the largest company in the country.
So 53 to 84 and FY25?
120.
120. So again, it's 50% growth. And what are you targeting for FY26?
Around 150 to 160 odd crores. So I
So the
think for
growth will go
us,
down from 120 to 150. You're talking about 20% growth only.
I think what we are looking at Nasher Miles is with the resources and with the investors, what we have. Our first question is, what is our EBITDA? What is our PAT? And the third thing is top line. Top line lana बहुत आसान है. We can easily do it every single day, tomorrow as well. But we want to make this business sustainable. We want to function. We want to make Nasher Miles a self-funded engine, to be honest. So right now, with the resources and bandwidth we have, I think growing profitability is our key metric we are tracking. Revenue can come, matlab it will be completely fine.
So FY25, you said you are profitable, very thin margins.
Yes.
FY26, what sort of number you are looking at?
We are looking at around 5% EBITDA. And if we are able to raise a smaller round of debt, we will be refinancing our majority of the debt. So हमारा जो interest cost है, वो काफी reduce हो जाएगा, which will give us a PAT benefit of close to 2.5%.
Perfect. Perfect.
Yeah.
So I see nice colors of your bags, but nowadays we look at these smart luggages, which is trending. Can we expect Nasher Mile also? Like, I was in Singapore and I saw someone with a small scooty and, kids driving those. How about those smart baggages? Have you thought about it?
I think we always think about it, but whatever we do at Nasher Miles, we always think, is it scalable? If it is not scalable, it is not meant for us. So the smart luggages, the scooty which you are seeing, it is targeting to a very small audience. आज के दिन में India is traveling, but Bharat is where India is. Okay, so we need to make our strategies where we can scale. And at smart luggages at 50,000, 60,000 rupees, there aren't enough buyers. So right now, it is good to have, it is good to see, but I think it's not a good business opportunity for us.
Perfect. So thank you so much, Lokesh. Best of luck to all of you.
Thank you so much.
We have limited time, so we move to the next company, with Toffee Coffee.
Thank you.
Hi, Hitesh. Am I audible?
Yes, you're very much audible.
Hi, Hitesh. Thank you for giving us an opportunity.
Thank you, Rishabh. Yeah.
To be right here. Okay, so I'll present my screen. Let me know if that is visible.
Yes. You want to play that video before?
Yeah.
Yes. Later. No, fine. Yes, Rishabh, we can see the screen.
Okay. So, hi everyone. Thank you for taking your time on this evening. My name is Rishabh. I'm one of the co-founders of TCR. You might have seen our Shark Tank episode and one of our clips of Shark Tank where maybe Ritesh calling us Bazigers got really viral. But about us, we're right now building a mass premium specialty coffee for millions of Indians. Our majority of concentration right now is towards the mass premium segment. And primarily what we feel is India right now is super premiumized towards the coffee category. And while we have seen other geographies across the world grow, and while India has primarily left out that wave of affordability in the coffee category, what do we mean by that?
Rishabh, I'm sorry I'm intervening in between, but why don't you share your journey? What made you start this brand? And tell us more about you and Nandini, how you started this, how as a couple you started before marriage or after marriage?
तो हमने पहले स्टार्ट कर दिया था. So
हमें नंदिनी बताएंगी तो ज्यादा अच्छा लगेगा अगर वो आ सकती है.
Nandini, I think Nandini would tell us her journey.
Yes, Nandini, over to you.
Yeah, so basically, I and Rishabh now know each other since 12 years, and we were friends. He was in college second year, and since then we know each other. But like by default, my nature is like hustling, and I always been there and wanted to do something of my own. And while we, like I and Rishabh used to travel, we have been to the coffee farm in Yerkad, and that's where we realized that we definitely had the passion for coffee, but we love coffee so much and we wanted to start something. And but Rishabh comes from the marketing background where I am more of the product. And I was very much fascinated by seeing that, oh, coffee is not brown, it's green, then it's roasted, there is a whole process. And I somehow convinced him to let's go to Hassan, it's a village in Karnataka, and let's stay there and learn roasting. And definitely he was working there.
This was when you were in second year of college.
No, so this was like we met in second year, but just right after college, like in 2015, he was passed out. And it was like 2016 when exactly we were there. From 2012 to 2015, when like we were in the college, definitely we didn't have money to go and hang out. All those years were more of the calls, texts, and once a year you have to actually collect the money to meet also. So
Correct.
that time we don't used to get that much of pocket money and all. So that was there like 4 years. But after that, when we started the job, and we got some money so that we can travel here and there. But as we share the passion for coffee, we chose the state to go, like stay in the state in Yarkad. And there we saw how exactly coffee works and what is the process. There is a roasting, and there is a grading, there is grinding, a lot more things behind the cup what we actually appreciate in the cafe. And that processes were really really passionating and like fascinating to us. And at that time, Risha was working, and I was not working at that time. I worked in JSW for a couple of years and left. And I convinced him somehow to just be there in Hassan for a couple of months, but he didn't have time. So he said, "Why don't you go and learn roasting by yourself?" And I said, "Okay." And I just stayed there in the village. I learned the whole process, understood coffee. And when I went back to Bombay, and I said, "Why don't you also go for a couple of days and see?" And he was not ready because he was not having time. But he also had in mind that definitely we have to do something in coffee, then we have to take out the time as well. So he managed somehow, and he saw, and he comes from the background where he understands market, and definitely a product needs a market fit. So I think we make a great team where I understand product more and he understand the market more. And the journey finally took place, and we gave it a shape in 2019.
Interesting.
Yeah.
So how's been the journey? How is the revenue? What's happening now?
So 2019, we started with one outlet in Bandra. Idea was we bought this idea from Luckin Coffee, that is a very prime known brand in China. So idea was to build around small outlets. जहाँ पे Starbucks is primarily in 1,000 square feet, 1,500 square feet formats. तो वो format हमने borrow करके Bandra में start किया. That was successful in the first 5-6 months itself. So we extended that idea to Phoenix, Kurla, where we opened in front of Starbucks. So for young guys to open in front of Starbucks was something courageous at that point of time. So that also worked out. But during lockdown, we had to shut our outlets, and that was a pivoting moment also. But we were very perseverant as two individuals because we were seeing internationally things were working out. So we said we will pivot. Now pivot happened when कि हमने Bandra में अपनी roastery we started operating, and we started packaging our coffees. That was a product journey start where we were roasting coffees in Bandra outlet. Used to get those roasted coffee at a 2 BHK in Powai in Bombay, and package it and first send it to our consumers who used to sip coffee at our cafe. And because that started working out, and then we opened up logistic across India. Now that scaled up too much in the first year. So first we did 50 lakhs of revenue in that lockdown in the first year, scaled up to 1.3 crores, then again scaled up to 2.3 to then we came up on Shark Tank in season 3, scaled up to 4.5. Last year we did around 7. So every year we have
From
been
Shark Tank India, from 4.5 crores to 7.5 crores on revenue. Am I right?
correct.
Wow.
Yes,
Great.
yes,
So fantastic growth. Almost a 60-70% growth from Shark Tank.
correct.
Correct. And how does this year looks like?
Okay. So this year, primarily, we are sensing that it should go in the range of around 25 odd crores. Primarily, quick commerce is fueling our growth, is what we
So
can say.
from 4.5 to 7.5, and you're talking about 25 crores.
Yes, yes.
You're talking
So
about
this year,
almost a 300% growth.
correct, correct. So this year, primarily, I think we have been able to crack quick commerce. In last 6 months, we have seen our revenues going doubling from where we were doing 40, 50 lakhs a month. We have gone to 80 lakhs. Currently, we are on path of doing around 1.5 to 2 crores a month. Uh, so we have been able to identify a lot of hero products in subcategories of coffee that are flying on quick commerce, not just in tier one cities, but tier two cities also. And much of what we will attribute it to also the infrastructure that quick commerce has built for new age FMCG brands.
So what is your revenue for the last 5 months, I will say?
So
From
roughly, we
April
have been
to
so roughly
August.
it is in the range of 1.2 crore to 1.4 crore in GMV. And I
Okay.
think this will go to in
You're
the range
talking
of
about doubling, not tripling it now, because you're talking from 7 to 25.
correct.
Vis-a-vis in 5 months, you're done close to 6 crores only.
So it will so in terms of GMV that has been around 8.5, and it will go to around 4 to 5 crore a month in GMV by March, is what we are saying.
Okay.
And why we are able to do this, I will like to present that when lockdown happened and we pivoted it to online, we actually worked hard and made the product. So we have been a product focused brand. And now when COVID almost shut, and even during COVID, when the Blinkit, Zepto, everybody actually took birth and started their company, actually the online market became more exciting for India when we were working on the product. And when we were ready with the full-fledged product, we already have a distribution network ready for it. So till Shark Tank, our quick com story was not there. Still, like Amazon now is a very recent launch. Flipkart Minutes in the quick com is again a recent launch. So we come up with a full-fledged coffee stack company where we have been focused in the building product, and now our product is seeking a various distribution. So that's why the multiplication is happening faster.
Got it. And what
I'll just
valuations? Yeah, sorry, look.
I'll just take 10 minutes to walk through.
Quickly, yes.
Correct, correct. So broadly, we find that India is at the cusp where it is going from a 15,000 crore to maybe over maybe in next few years to go over 20,000 crores in market in coffee. And what we have seen in other geographies, what we have researched, that primarily India is over premiumized coffee market, and we have left out that mass premium range. And where India starts drinking coffee, they're looking for much affordable cups and still looking for that premiumness in that in the range. So primarily अगर आप 14,000 crore कॉफी को अगर आप डिस्ट्रीब्यूट करोगे तो 50% is kind of at home coffee consumption and 50% is out of home coffee consumption. Initial focus हमारा छोटी categories में था कॉफी में. So one is grounded coffee for people who are brewing their own coffee at home. A few other behaviors in coffee were also emerging: cold brew coffee, pour over coffee. In South, it is South Indian filter coffee. So we kept on expanding these ranges. Our focus was to build from a manufacturing first perspective. So we were able to provide at an affordable cost only because we were sourcing our own coffees, roasting and blending our own coffees, and packaging our own coffees. And finally, we went into the largest category in at home, that is instant, but from an origin first perspective, where maybe a new age competition like Sleepy or Rage were focusing on flavored instant. But when we were talking to consumers, they said कि वो hazelnut, vanilla, butterscotch instant coffee daily नहीं पीते. So the whole point was, can we have origins that can deliver original flavors for them? And then we went into coffee pods, where Nespresso is a direct competition for us. And right now we are launching ready to drink that is in a cold coffee can. Right? The same behavior we are seeing offline as well, where maybe other geographies like China and Indonesia, you will see large players in the mass premium that are heading with Starbucks. But versus in India, the large players are super focused, super concentrated in the premium range. And I think that gives us an opportunity to build for India 1 and India 2, both from a mass premium perspective. So right now we are sourcing coffees not just from India, but from other parts of the world also. तो हम ब्राजील से, कोलंबिया से, तंजानिया से, इथियोपिया से कॉफी लेके आते हैं. 60% सोर्सिंग हमारी इंडिया से है, 40% सोर्सिंग इंटरनेशनली है. वी हैव सिंप्लीफाइड द प्रोसेस. तो हम अपने आप कॉफी सोर्स करते हैं, अपने आप रोस्ट करते हैं. Right now, I'm sitting in a 5,000 square feet facility in Bangalore. So we started in Bombay, but बहुत जल्दी we understood that we cannot scale this model from Bombay because 70% of India's coffee grows in Karnataka. So we cannot be very, very far from the supply chain. I think that has helped us a lot in reducing our cost of goods. So initially that was over 60% because focus was always towards the mass premium segment, and that has extremely helped us a lot. So this is a facility right now that is a 5,000 square feet, but very soon as we are scaling, I think we're looking out for maybe around a 20,000 square feet where we'll do a lot of things, maybe once of a kind in India itself, where we'll do all kinds of coffee under one roastery itself. So right now we have over 20 plus SKUs in coffee across various categories within coffee. Every year we have been able to double up our revenues. Currently 40% of this comes from quick commerce. Have served over, right now as I'm talking, more than 2 lakh plus coffee lovers. In terms of net sales, that is around 80 lakhs. In terms of GMV, that is more than around 1.2 to 1.4 crores. GMV or net sale ka prime reference is around commissions that we give it out to quick commerce. Right now we are across these categories that you can see. These are ground coffee for people who are brewing their own coffee. For hot brew pour over coffee, that is a very emerging category. People who are switching from instant coffee and they're not willing to own their own coffee accessories. Few other categories that are emerging in India. One is coffee capsules, in which Nespresso globally does around $3 billion in revenue. It is a Nestle's brand, and India is a market for them. We are one of the few competitors of Nespresso in that category. So recently we launched coffee pods, and we have taken an Indian approach. So we are trying to take India's finest Arabica coffees, pack it into these coffee pods, and kind of deliver. We have seen some great success in this category. Our coming product launches are in cold coffee cans. Just to tell you, in US, the largest growing category in coffee is cold coffee can. It's not even instant, it's not even grounded, it is this.
So Rishabh, bhai, with this, I want to ask you a question. What percentage of India consumes tea and what percentage of India consumes coffee?
So I think most of the India consumes tea, but right now, as we are seeing right now, close to this 14,000 crore market that has emerged. I would say close to, as far as Coffee Board of India, close to 30 crore of India at least drink 1 cup of coffee in a year, which was less than 10 crore maybe a decade back. So we are seeing more amount of coffee drinkers happening who are going to sip their first cup of coffee in the coming years. So अभी वो 30 करोड़ है कॉफी बोर्ड ऑफ इंडिया के हिसाब से.
So the growth is in tea or the growth is in coffee?
So
in terms of
see,
consumption,
coffee, I think if you say in terms of value, coffee will deliver much higher growth because this is the time right now India is going to drink coffee, and in terms of value, you will see much more in coffee because there are a lot of chai ka tapri when you step out of your office, but you will not see coffee ka tapri.
correct.
Correct. So the whole value, I think, comes in when we start building these small outlets at an affordable cost. So I think value is going to come in coffee, and it is an era where you will see a lot of value coming in Indian-based coffee that you're seeing right now in
And
India.
even China invented tea, and that China used to be a tea drinking nation. But now, when we look at China and Luckin coffee brand, China has become more than $20 billion coffee market in
Correct.
last 10 years. So definitely, when we are almost equal in population and the kind of development we are seeing in India, and India is moving out, and we are seeing that people are actually having more disposable income and want to upgrade their lifestyle, because as Ritesh also mentioned that people are going to Dubai even in summers because they are getting a budget trip, and the same for Thailand, right? So definitely people might be earning 60,000 to 70,000 a month, but they will not like to have a classic right now. They will not mind paying 20 to 25 rupees extra for their coffee because they are value conscious, not price conscious, and they will want to upgrade their lifestyle. And that's what we are seeing in India, where the culture is immersed in F&B. coffee. And when we are same in population, we are also hoping that by 2030 we will also have certain more number of 1,000 crores added in the coffee revenue. And after Blinkit, Zepto, and these quick com, we are seeing there is a new market altogether which has come up. Earlier it was only retail or the cafe, but now ideally it's a quick com, and then it's out of home, which is cafe, and then the e-commerce. So I think the multiplication on the distribution and the kind of disposability income has increased for people. People are more focused to upgrade their lifestyle. Anyone who is like, in their young age or the Gen Z going out, they're not having tea. They're definitely gonna go there for coffee or coffee kind of beverage. And apart from the revenues, I think there is one thing what has been missing from the Indian market was when Nescafe came, definitely they came up with the bad quality of coffee because India was not a coffee drinking nation, but it was just available at my Kirana store, and definitely I will go and get that sachet for 2 rupees. But now when India want to have a better coffee, they will not mind paying 5 rupees for that sachet, but definitely they have sipped that kind of coffee outside India, maybe in Thailand or Dubai. So
Right.
when they come back, they want to have that coffee, and that coffee is not available still, because only even outside home, when we talk about Starbucks or any other Indian cafe brand, they all are still playing around cafe latte or the cappuccino or the black coffee. But when you go to Japan or you go to Australia, you will find the menu starts from coconut latte or jasmine tea blend latte. So India wants to try, but they don't have the option, and that's what we want to provide them.
So which country globally has the maximum consumption of coffee?
The
Definitely.
US and Japan are two largest coffee markets. So US maybe is more than around 50 billion. I think Japan follows up there. China is after Japan, and I
So
think
US is
Indonesia.
50 billion coffee market.
More than 50 billion.
And India today?
India is right now only 2 billion. I think the decade or a two, you will see coffee as a beverage going a lot. I
Wow.
think
So
China
there's a huge
is where,
scope for the
yes.
markets to grow
Yeah,
with
yeah,
the
India is still at a
population.
nascent stage, and I think this is the right time where we can actually establish and make people drink more good coffee.
Yeah.
Interesting. So what valuation you're asking? What valuation you want to dilute your stake?
So currently we are raising 8 crores at 40 crores pre-money is what we are looking out for.
And when you went to Shark Tank, what was the market cap?
So we raised a Shark Tank round at around 15 crores. उस समय हम कुछ 20-25 लाख महीने का कर रहे थे. Mostly with our own website. Right now we are doing more than 80 lakhs in net sale, 1.2 crore to 1.4 crore in GMV. So that is close to around a 4x jump that we have seen. Primarily, quick commerce is something that has worked really well for us.
And what is the utility of this 8 crores?
So primarily, we want to deploy in scaling up our quick commerce. So 60% deployment is on around the working capital. 10% will go back in our facility to improve our production capacity. Around 10% will go in around increasing our team strength, hiring vertical specific folks. I think that's it. Rest, I think we want to utilize just around increasing our working capital in quick commerce.
And what's your roadmap towards profitability?
So last 8 months we have been profitable.
Wow.
When we entered Shark Tank, we were having slight amount of losses. That was primarily to scale up our quick commerce. So quick commerce takes some amount of marketing budget that enforces on brands to spend so that they can scale. I think we have already done that in our last year, and currently, as I'm talking, we have been delivering 10 to 12% EBITDA levels. That is only and only because if you see our category, it is highly repeat versus someone like a Nasher Miles, where you have you maybe buy a luggage once in a year or maybe twice in a year. Versus with coffee, if you stick to one coffee or you like one coffee as a flavor, you might buy 10 to 15 units of coffee in a year.
Correct.
Correct. So for us, the lifetime value in a year, what we are seeing is close to around 8 to 12,000. Considering the ASP of one coffee is around maybe 400 to 600 rupees. So
Nandini, you actually convinced Rishabh to start this venture, correct?
yes.
Yes.
So Rishabh, this was also one of the reasons that if you start coffee venture, then only Nandini is going to get married to you?
No, I think we were too young for that. It's just I think we are a good partner, I think, and I think in a way we have grew up together because we were too young, and now I'm in my 30s, and still I know that it's been a very long time with him. So I think the understanding increases, even that helps in the business as well because you understand the person altogether. And
Correct.
definitely it started like that, but it was not like that. And I think marriage also has its own story because we were too occupied building the business, but our house and family saw that these two people, I don't think even get time to get married. So why don't we actually pull them together and just say that, bro, if you want to do whatever you want to do it, just get married. And and that's how
Correct.
we actually got married.
Very, very interesting. So you are talking about a valuation of post money 48 crores.
Post money 48 crores. Yes.
So, ladies and gentlemen, whoever is there in the call, I think 48 crores is the valuation. The company is doing exceedingly well. What Rishabh mentioned to me that from 7 crores, they are talking about reaching to a revenue of 25 crores. So, do your due diligence and look at this venture. So, thank you so much, Rishabh and Nandini. It's a pleasure to see you, and we'll have more conversation over the period of time as we start helping you raise capital. So with this, we move to the Zebralearn learning team.
Thank you so much for
Thank you
having
so
us.
much.
Thank you, Hitesh,
So
for that.
Anurag and Radhika, over to you.
Radhika is not here. Hi everyone. Hello everyone. Sixth company on the day. So
Yes,
I'm so
long
happy.
day.
So I'm so happy. First things first, it's absolutely great to hear from Ritesh sir and other companies and to learn from them. I think I have learned personally a lot in the last 2 hours. So thank you so much for that. I'll just share my screen. Just let me know. Is it visible?
Yes, we'll do.
So let's get started with the story actually. First, before we get to business, 2016 to 2019, I spent some time working on some research work. 2019, I wanted to share it in form of a research paper first, but then it went on and became a long document. So made that into a book. So ended up publishing my first book in 2020 by the name of Rich Ponds, still on Amazon. And with a lot of excitement, a lot of work behind it. The book was live. I remember the date, 10th of August, but did not sell. I did everything that I could, worked around it on for about 1 year, took a lot of effort, but that is where I first felt how helpless any author feels when a book is out in the market and or when they release a book and I saw what are the infrastructure what is the infrastructural gap or what are the pain points that an author faces. We sold about 200 units in about 6 months after the release, which is hardly anything. Out of those 200, I knew 100 of them personally, which is friends, family who were kind enough to get a copy of my book, and few of them actually took time to read it as well. But then Radhika came in. Radhika is my sister. She is really one heck of an artist. She came in. She said, "Let's try to make this work. Let's see what are different things that we could do." We tried different marketing angles. We tried adding on few more things in the book. One such attempt was we made the books visual, and we released it. And in a month, we sold about 5.5, 6 lakh worth of books from nothing, and all between me and Radhika. And I think that is exactly where Zebralearn was born. So that is our story of getting started with Zebralearn. It's a visual books platform doing the boring things, that is books, but in an extremely fun and engaging manner. I think that is what Zebralearn is all about. So before we go forward and talk about business, I will want to walk you through what the platform looks like, what it is. So this is what we are building. All of these books are extremely visual in nature. These are books which are on very deep topics, very deep business topics. We focus largely on business books and now some K-12 titles. But these are some titles that we do. I'll just open up one of them. For example, I'll just open, let's say, something on HR. Is is the screen sharing? Can you see the book?
Yes, very much.
Yeah.
Yes.
So everything that we do, it's all very serious content, very outcome oriented, but at the same time, very fun and engaging in a lot of ways. How I see this is something that even my dad can read as compared to something that is black and white, something that has been existing for a very long period of time. So this is a much more contemporary or a modern version of the same, which our generation relates to, or even the older generation relates to, because it takes lesser time. So all in all, what we do with each of our books, we do three things with every title that we publish, every non-fiction business title that we publish. Number one, our books are very actionable in nature, very India-centric in nature. Number two, all our books are very illustrative in nature. As I saw you, I have a few copies here as well. This is the one actually I gave to Ritesh sir on Shark Tank. So this is something that's very dear to me now. So everything that you see, every page is extremely visual. That makes it fun and engaging. And number three, we add a layer of what we call value additions to the books. So value additions would mean something like this particular book comes with a dictionary. There's another book that comes with playing cards. There's another book that comes with a puzzle with it. There's a book that has about 70 odd podcasts shot exclusively for the book. So this makes it much more fun and engaging. And that is exactly what we are trying to do, trying to motivate the reader a lot more. And that is what the product is. That is what we publish in the market. And the platform, that's why we call it Visual Books Platform. This is what we do as a business, and from more from a business point of view. This is the supply side: authors, educators, even brands and creators. These people, we partner with these people. They come on the platform that is ours. They give us the intellectual property. We are the exclusive license holders of all these IPs. There's no one else that can sell these products, that can, even the author can't sell these products. It's even if they have to sell it, they have to source it via us. Then there is tech and distribution, that is our promise to the mix. We work on that. And then there is the demand side, which is individual readers, corporate L&Ds, that is learning and development divisions, schools and colleges. So this is the overall business. From a business point of view, the demand side, or these people, they buy from us. We book the revenue on our balance or our P&L, and we pay the supply side, that is authors, creators, brands, educators, a certain royalty against every book that is sold. We don't pay anything upfront. That is more from a business model point of view. So every sales is booked by Zebralearn, and we pay a part of sales as royalty to the supply side. Again, as I said, the problem that I saw from author's perspective was poor economics, even with successful books. If a book has sold 1 lakh copies in India, before us, even then the author is making about 50 to 60 lakh rupees, and very few books sell 1 lakh copies in India. Second, they're very unequipped to promote the books. From the reader's side, we understood later. Personally, I'm someone who reads a lot, so I had to speak to many other readers to connect deeper. Black and white books end up being extremely boring, text heavy, they're not engaging enough. And that is what we saw with our books. That is what we solve with our books. Each of these books are extremely actionable content, visually illustrated, and value additions. Doing this, what we have done, I'll come back to this slide in a moment. We've done about 40 titles so far. So idea is not to keep on publishing as many titles as we possibly can, but to publish really high quality titles. We've published 40 of them. 13 of them actually have now become Amazon bestsellers at different times, or become the best book in the country for a period of time on Amazon. And that is the model. And these are all in different genres, meaning one is marketing, one is personal finance. So the model is actually to make books in different categories that are category winners, and put it on Amazon, our platform, and all the Flipkarts and Amazon US and all these different places. From users' point of view, these are some times that we have clocked. About average person spending about 15, 16 minutes. Last month we did about 1.1, right now we're doing about 1.1 to between 1.1, 1.2 crores in annual revenue, monthly revenue. Next, these are some numbers. Our largest visibility is via Instagram ads and Amazon ads and Google ads. Few of you might actually have seen us on these few of you might have seen these advertising ads This is actually what we do from an author perspective. This is exactly my book. I was getting about 60 rupees per unit sold. The publisher was making a 5% margin. We sold about 200 units. The same book converted into a Zebralearn style, same content, but much more engaging. The author makes about 225 rupees per unit sold. Now, again, I don't get any royalties, but the point is, for any third party author, this is what we end up paying, about 15% of what we sell. And from a publisher angle, we still make about a 15% margin from every unit that we sell. And that is after we are spending on customer acquisition via these platforms. So that is that this is largely the difference between the black and white book and our book. These are some author royalties that we have successfully been paying. 20 authors have been published so far. About 5 of them now, in fact, 7 of them are working on second book. In fact, one of them has also started working on their third book. So this is what we are doing for authors. From an industry point of view, India right now is about 65,000 crore market. This is slightly dated. This is 2021 report. India is right now about 60 odd thousand crore market, out of which about 25,000 crore is K-12 books, 25,000 crores is test prep, that is CA, CFA, MBA, all these books. The balance 10,000 crores, about half of it is fiction. The balance half is 5,000 crores, which is the market in which we operate. That is non-fiction, business-oriented books. That is what we have. That is the subpart. We have also now entered into K-12 categories, K-12 books. These are some other publishers that are global ones. India does not have a lot of self-publishers, a lot of good publishers. India largely relies on publishers that are Western, and that is one problem that we saw, that an Indian specific publisher specific to Indian problems, that creates a big space in the country that we should be able to fulfill. That is what our understanding is. Coming from a finance background, what we saw, what we understood, that to scale book publishing effort, which is a very manual process in a lot of ways in the initial parts. Now, a lot of tech and AI particularly has come to help with things like editing and giving a feedback on any piece of content that's submitted by author. We have created something called as Zebralearn Studio. Zebralearn Studio happens to be our in a way, it helps us manage work, but in other ways it helps us integrate technology to build our books much cheaper and build and be closer to these creators, who are people that are paper projects. So we work with about 50 designers, 40 writers, about 60 authors right now on the platform, 30 plus creator conceptualizers, and so on. Some books that we've published, or we look for three things whenever we sign up a book. We look for author who brings in some sort of brand equity by themselves or the brands that they have worked with. Second, we look for 12 years or more of direct experience in that particular space. And third, we look at a topic that's large enough, that is at least 10,000 searches on Google every month. We have also partnered with Motilal Oswal, Grow, and now with Kotak Securities as well to publish their books. Our initial set of books were largely in finance, so that is why those books appeal to them quite significantly. Now, large part of our portfolio is into marketing. How do we plan to go forward? Right now, we have about 40 titles. By end of year, that is March, we should have about give or takes about 65, 70 titles. Any title that's released takes about 3 to 4 months to ramp up and come to speed. I don't think 4 crores is the number that we should be able to achieve. We should be at around 2.5 crores. 2.5 crores is more of a realistic, between 2 and 2.5 crores is the realistic number that we should be at about March 2026. That is what we are working towards. We are also, in the next 3 years, we want to get into more fields, that is K-12, K-12 books and test prep. Test prep we are not very sure of, but K-12 and non-fiction books, 200 titles. These two we are very sure of we want to do in the next 3 years, and we want to go deeper in the same markets. That is scale our performance marketing, but more than that, get more users to buy again and again from us. One thing that has significantly changed in about 1 year for us is that our repeat numbers have gone up from about 12-13% to right now about 28-29% people who are coming back and buying more and more books from us. This is what we look at from a 3 year plan of point of view. Numbers so far, I pointed out, we're losing about, we did scale up our losses in about May, June. Right now, we are tapering down the amount consumed. By December this year, we plan to become green. Also in this, we are investing about 10 to 12 lakhs every month. That is included in this in new content that will contribute to sales going forward. So that is not really an operational expense, but more from an investment in the future perspective. From a founding team perspective, there is me, there is Radhika. Both of us come from finance. I have worked in a mutual fund as an intern and then in a PMS, that is Astute Investments in Mumbai. After that, I wrote my first book, as I said, and right now, product and software teams do report to me. Author teams, author relations, and all those things are managed by me. Radhika comes more from a marketing background, or she's self-taught actually. She used to work in private equity division for about 1 year in JM Financial. Uh, so and then now she's obviously responsible for marketing and the creative side of business as well. So that is between us. Outside that, we have a very capable team, about 45 people, very good core team, about 7-8 people there, and looking to grow the business and make it the go-to platform in the next 2 to 3 years for anyone, anything books in the country.
Anurag, thank you so much. We have very limited time now. Last few questions, very, very quickly. What is your ask? At what valuation? What is your revenue for last 3 years? And how the sales has grown from the time you entered to Shark Tank till now?
So last 3 years, I think FY23 we did 3.2 crores in revenue. FY24 we did 10.5 crores in revenue.
Fantastic.
FY24 we did 10.5 crores in revenue. FY25 we did 15.5 crores revenue. This year we should do anywhere between 18 to 20 crores in revenue. We have done about 7.5, 7ish so far. In the first half, in the second half, we see doing another 8 to 8.5 crores, and outside that, another 2.5, 3 coming from the books that are done with the brokers in the country who will be giving us distribution to their audience. So largely, these are the numbers. Uh, Outside that, in terms of ask, we are looking to raise about 12 crores at a pre-money valuation of about 65 crores, which is we're just expanding the last round where we raised 2.5 crores.
Interesting. Thank you so much. So who sparked this idea between you and your sister? Like, who thought about this?
I started the thought of writing a book because that was a personal project to me and something that I was very passionate about. Radhika brought the business side to it. That is making it viable to the market, engineering the product, and really getting the nerves of the reader. I think those parts are done by Radhika, and so artistry is her. The boring work is mine.
Okay. So from idea, you talked about that you were the first one to come with this. So from idea to launch, what's the typical timeline from for bringing one of your books to life?
That's a very interesting point that you bring up. So it can range. First thing to directly answer, it can range between anywhere between 3.5 months to up to a year as well. Depending on how quickly the author gives us the content, that is one part that we do not or we cannot directly control. We start working only once the content is submitted by the author. So we take another 2.5 to 3 months to publish it. Sometimes the content is ready, so in those cases, 3.5 months. Here, very interestingly, we have worked around a model where authors do not really often have to write their books as well. We call authors to our office, or we go to their office, spend 3-4 days with them, end to end, entire days, and they narrate the entire content. And trust me, the depth that they give us, that is no match to what they would have given us in writing. So this is something that has really worked with a lot of our authors, and we're able to attract people who are active in their offices, not really people who are spare time or have retired, but people who are really in the game right now as well.
Interesting. So, but even I was watching on Shark Tank, and again, I have the same thing that it's a time of technology, everything is available online, and your books are priced much more than the market, right? Where one of the Shark Tank judges said that my book is at 300 and this is at 1500, and she had
Yes.
not invested. I had the same concern.
Yeah. So I think you bring in two questions, and very important two questions. Pretty much, these are two questions that I get asked often. One is more from why books, and second is more from why price it up. Why price it up? So there are first things, why books. So I have this is something that used to give me sleepless nights in 2023, because we were working on this business, and only committed to this. So I read some history up, and I saw that if you want to read something or learn something from scratch, everything is there, but there are only a few options that you have: a book, maybe a course, or some live class that you can enroll in. There is absolutely nothing else if you want to learn something from scratch. Number two, the same argument came up when internet came up in early 2000s, कि सब कुछ तो नेट पे फ्री में है, everything is on blogs and everything that you can read up. But despite that, since then the books industry has grown up about 4.5 times. So the reason for that is, in this structured manner, in this detail, combined with an author's expertise and experience, there are very few alternates that match it. So, and that reflects in our numbers and our feedback. Otherwise, we should not exist. So that is what our understanding is. And obviously, I am a little. What do we put? We are in this business, so I'm a little biased in that sense. But we are very optimistic in that sense. Number two, when it comes to the price point, so there are three angles to it that we look at. Number one, from an author's perspective, we do commit to making the business viable from an author's perspective. Price makes it viable for the author, and what that does is it makes the author commit to give their best in the book and give the relevant and right amount of time and detailing. That is from an author perspective. From a reader's perspective, we don't want, internally we say we are not a book selling business, we are a books reading business. So we don't want people to just buy books but also read them. So when someone pays a 1500 price point or a 1200, 1300, that's our average order value. That price point, they do read it. It's not a book that they will, so that financial commitment makes them finish a book. Also, when you compare it with other learning models, when you compare it with books, it's about 1.5 times to 2 times expensive. But when you compare it with other learning models, like courses, it's actually a bargain. I can assure you, once someone spends 5,000 rupees on Zebralearn, they'll have meaningful change in their life from a learning upskilling perspective.
Very interesting. So you talked about a revenue of 20 crores for FY26. Where do you see revenue over the period of next 3 years? Because this year I'm looking at the growth is slow, because
correct,
from 15 you are talking about 18, 20, correct? So where do you see next 3 years on revenue?
So next 3 years, from what we believe and what we are working on, I think we should definitely want to close 100 crore top line in that range. The largest publisher in the country does about a 400 crore top line, roughly around that. That's Penguin's Indian branch. So we would definitely want to hit that 100 crore markup, and then also introduce other products in that range.
Thank you so much. I think, thank you, Anurag, for, I think, fantastic. And there are people still, on the webinar. It's almost more than 2 hours now. So thank you everyone for joining. Thank you so much, Ritesh bhai, for enlightening all of us. And God bless you once again. Thank you so much, Nasher Miles teams. Thank you so much, Toffee Coffee teams. And thank you so much, Anurag, we already spoke. So great learning. So ladies and gentlemen, we have again, which is Analah Global Angel Investor Network. We keep showcasing you interesting ideas, on the startup space. This was the first session, so I, I was a part of it, but my team will keep showcasing you ideas. So we are looking at 15, 20 ideas on month basis, right? For you to take a call whether you want to invest in these startups. So thank you so much. Ritesh, I want to say something in the end?
No, I'm just so proud and happy to see all these fantastic companies continue to scale. So I just want to say congratulations and wish them all the very best for their continued success.
Thank you so much. Thank you, everyone. Thank you.
Thank you, Hitesh. This
Bye-bye.
was great.
Thank you so much.
Thank you. Appreciate it, everyone.
Thank you. Bye bye.
Thank you.